the YieldMax Universe Fund of Option Income ETFs. Ticker symbol YMAX was launched in January of the year 2024 with a stated primary goal of delivering high current income and a secondary goal of capital appreciation. The fund is what is called a fund of funds, meaning that YMAX invests in other YieldMax option income ETFs, each of which follows synthetic covered call or option income strategies on individual large cap stocks. Because of that underlying design, the fund's upside is capped while downside remains exposed. The fund prospectus clearly states that the fund's indirect exposure to gains, if any of the share price returns of the underlying securities, is capped. However, the fund is subject to all potential losses if the shares of the underlying securities decrease in value. That means investors should understand that high yield may come at the cost of principal. The expense ratio is around 1.28%, and the fund indicates that distributions are not guaranteed. Since inception, YMAX appeared to produce strong total return numbers in its first 18 months, with the yield and payout rates drawing attention. As of the 9-month period ended September, the cumulative since inception return was approximately 45.41%, and the annualized rate around 24.53% according to the fund's own data. However, when digging deeper, the fund's disclosures show that a substantial part of the distributions are classified as return of capital. For example, the distribution declared October 14, 2025 contained 60.55% return of capital. Return of capital means that part of the payout is coming from investor principal rather than from realized earnings or option premium income. The more often this happens, the more the net asset value of the fund is reduced, and the harder it is for the fund to grow its capital base. Now let us bring in the significant market event tied to what President Donald J. Trump called Liberation Day, which occurred April 2, 2025. On this day, the president announced broad sweeping tariffs on most imports, including a baseline 10% across nearly all countries plus higher country-specific tariffs, and declared that April 2nd was Liberation Day. And the markets reacted with a sharp drop. U.S. stock futures fell more than 3 to 4%. The S&P 500 declined nearly 5%. The Nasdaq Composite dropped around 6%, and the Dow Jones Industrial Average lost over 1,600 points. This was triggered by the trade policy shock, elevated uncertainty, and fears of global retaliation. While many major indexes experienced a sharp fall and then at least partially recovered, by mid-2025 the S&P 500 had turned positive for the year after the Liberation Day shock. YMAX did not mirror the broader market's full recovery. Instead, the combination of high-income payouts that included return of capital, the capped upside inherent in its strategy, and structural drag from frequent distributions meant that YMAX showed performance that lagged what might have been expected had it simply tracked a broad index. The NAV of YMAX has not recovered to all-time highs in the same way many broad market funds have after April. On discussion forums, many investors point to NAV erosion and structural limitations as reasons for the lack of full rebound. So was YMAX a good investment since inception? The answer is nuanced. For investors seeking high income and comfortable with principal risk, YMAX has delivered large distributions, weekly payouts, and early headline returns that look impressive. But for investors who expected long-term capital growth and recovery in line with broad market rebounds, especially in the post-Liberation Day environment, YMAX has underperformed. The structural mechanics of capped upside, full downside, return of capital erosion, and dependence on option premium income in volatile markets all conspired to limit its recovery compared to broad indexes. My meter rating is as follows: income potential 8 out of 10 because of its high payout capability, risk 5 out of 10 due to its option strategy exposure and capital erosion risk, sustainability 4 out of 10 because of heavy reliance on return of capital, execution and flexibility 6 out of 10 given active management and diversification among underlying funds. Overall, my meter rating is 6 out of 10. YMAX is best suited for experienced income-oriented investors who understand the trade-offs and who are not relying on this fund to catch up to the broad market after a shock like Liberation Day. If you have any videos you would like me to cover, say it in the comments below and I will break it down in plain English.